Good morning, everyone. Today is Wednesday. It is August the 29th, and this is the Futures in 5. We are sitting here. The gallery is not quite ready, so we're actually going to go to Syncapa directly to view this gallery. And for the traders that are working directly with us, you can go to the blog, and I've got the images separated there. But let's start with a look at the ES. Okay, we've got this very tight range bound area between 28.97 and 29.03. That's really what we're going to have to watch for. If we lose that area, we can see that we're coming down into 28.94, 28.93, something like that. That's going to be a big region, because if we lose that area, then we're going to move into this thin volume event. But so far, it is holding. We've got quite a bit of technical divergence, so you're going to see wicks when that happens. But that is about the extent of what's going on with ES. Very range bound, so we have to be careful there. Also range bound with the NQ, but sort of grinding upward under the same kind of technical divergence. 76.02, 76.08 to 76.30 is a targeted formation to the upside, but we are really under quite a bit of technical divergence, and this has been a very big move. Primary weekly support is 200 points below our current pricing, and so that's a lot of motion without any kind of retrace. That always puts me on a little bit of high alert, but we'll watch that also carefully. Watch the edges near 75.81. Yesterday we held 75.68. We did lose it, but then recovered quickly. That's how you know something's going to hold. It's not that it loses, it's that it recovers. And so we watch that for the intraday space. Also very range bound there. Taking a look at the YM, sideways patch, big motion, primary support, 500 points below. A lot of motion without a retrace. Buyers holding new volume. We should see a little drift, but we can see also that the buyers are holding, so we can't guess that we're going to fade. As long as support holds, it's not going to happen. So you're going to watch these edges very, very carefully. Below that edge, because it is fairly bullish, if it loses that edge, the first thing we expect it to do is bounce. So don't take the short on the break. Allow it to bounce and then fail. That's going to give you the better bet. Today is the EIA report. We've got oil really getting up over our 68.80 area, but very range bound in the motion since probably about last week, Thursday, sitting in this edge. Negative divergence. So EIA may come and give us a nice bounce to the upside, but it is not a hold for continuation at this juncture. It is going to be a space that it likely reverses if it bounces higher. If it fades deeply, it's likely to bounce off that support, because we are range bound between 67.50 and 70. Lastly, we'll take a look at gold. We talked about this being a primary resistance zone all the way up to 1225. We stopped right there at that 1218. You can see the vacuum event here being built in. If this chart is going to hold, there's another vacuum down here that we may or may not visit. My suspicion is that we do visit that, but we do have quite a bit of upside drift. So any kinds of deep fades ought to be bounces, but if we hold this 1203 area, we'll see more upside back into 1212 and potentially back up into 1225. If we lose the 1203 area, we've got a motion that could take us all the way back down to the weekly support zones, and that's around 1190. That concludes the futures in 5. Have a good day trading.